Hi, my name is Andrei Jikh. Hope you're doing good. And today, Vegas Graham wanted to respond to LA Andre about his thoughts on Bitcoin. I promise I'm not becoming a crypto channel. I just wanted to make sure that everyone is safe and don't just FOMO into investing in Bitcoin without fully understanding it while it's still fresh and relevant in everybody's mind. But hopefully by the end of this video, you'll get a more balanced perspective between the two opposite sides, somebody who's a crypto skeptic and somebody who's a crypto believer. Because I believe in keeping my investments simple and traditional. Invest only in Pokemon cards, avocados, and Bitcoins. Please understand that Graham is a friend, so no hard feelings. I think he's very smart and intelligent, but sometimes we can disagree. Like for example, about his magic technique.
Just hold on 1 second. There we go, just made money appear out of thin air.
You see, that's what we in the business like to call the jump cut, which is where you cut from A to B in order to make something magically appear or disappear. But I think his technique needs work. So better yet, just learn how to do this in camera, show your hands empty, and then voila. Without any kind of video editing, you're a wizard. I realize not everyone can be Harry Potter, so the next pro tip I have is to keep as still as humanly possible when cutting from A to B. And to help, you can grab a friend or your girlfriend to make sure that you don't move and you're as still as possible, like this. Corey? Bam, and that's the final shot. So now that I've got the most important stuff out of the way, we can finally jump into Graham's first criticism about Bitcoin, which is one of regulation. Here's what he says.
The Financial Crimes Enforcement Network just recently proposed a new regulation that would require people identify themselves and their personal information upon request when transferring more than $3,000. It would also require the exchange to report your information if you make more than $10,000 in transactions in a 24-hour period.
Basically what he's saying here is that the government will be able to track exactly what you're up to and then make you pay your taxes, which by itself is not a big deal because we should, but what is a big deal is that they theoretically be able to track your wallet and see where you're making your money and how you're spending it, which is terrifying because then it reminds me why this jingle sounds so familiar. But jokes aside though, it's literally no different than the system we have in place today. Because if the government really wanted to find out how we were making money and where we were spending it, it wouldn't be that difficult for them to find out. So I'm not too concerned about that. Regulation will always be behind technology, and so there's always ways around it on a technological level. Plus, when it comes to regulation, I think it's a very good thing in legitimizing Bitcoin even more. At the end of the day, we want Bitcoin to have more regulation because that's what would give it more protections and make us feel safer about investing in it. That's what also would allow the equity markets to legally create investments that grandpa and grandma can buy into and then put into their retirement accounts. Because one of the things that's holding Bitcoin back right now is the fact that for the muggles or the no-coiners, it's very difficult to try to figure out how this works. How do I buy Bitcoin? Where do I store it safely away from people trying to steal it? So instead of doing that, wouldn't it be nice if you could just open up that same Fidelity or Charles Schwab account, buy a Bitcoin ETF, and then put it away into your Roth IRA account? That is a way better way of doing it. And as soon as the regulations are clear on a federal and state level, that's what would make Bitcoin that much better. And I do think this is going to happen soon because our government is relatively smart. Smart enough to at least understand that by creating favorable regulation, it's going to give them billions and billions and billions and billions and billions of dollars worth of tax money, and that's just good business. But if they fail to regulate it favorably or they decide to just ban it outright, then I promise where the US fails, other countries will deliver in spades. Always have an ace up your sleeve, except never wear sleeves. But just remember that the whole world can't all ban Bitcoin at once because one country's economic failure is another country's opportunity. Now the next point that Graham brings up is really good, and it's about price fixing or price manipulation.
Now it was suggested that the meteoric rise of Bitcoin in 2017 was largely driven by coordinated price manipulation using the stablecoin Tether.
Tether. So Tether's technically not a crypto, it's a stablecoin that pegs its value to the dollar one for one. So every time you spend $1, you get 1 Tether. And this was created to improve liquidity, which is a fancy word for saying that we want to make it easy for people to move in and out of Bitcoin. The problem though is that there's no proof that Tether is backed by any dollars and that we could be just printing them out of thin air. That's a problem because we're creating fake money and using it to buy Bitcoin. And what's worse is that when Tether was asked to be verified and audited by a third-party agency, they refused, which does not help their case. Officer, I swear I'm innocent. I didn't do it. Would you take a polygraph test? No, I'm good. Tether even admitted that only 74% of the coins in circulation are backed by real cash, and that is scary, because if we find out that the situation is worse than what we think, then Tether could be shut down by the US government, and overnight, Bitcoin will crash by as much as 50% or more. And it makes it very difficult for people to figure out how much of Bitcoin's price is real and how much of it is inflated. But one thing I'll say to counter that, though, is that price manipulation is technically not an argument against Bitcoin, and I'll quote Warren Buffett to back me up and seem smarter than I actually am. But remember, price is what you pay, and value is what you get. And right now the price could be outrageously high, but the value is still there regardless of what you pay for it, in that it could still be the potential economic backbone of our future. But to Graham's point, from a price perspective, yes, absolutely, there is still a risk.
In the last few days alone, it went from $28,000 to $34,000, then back to $28,000, then back to $31,000 within a few hours. Large sell orders can easily cause the entire market to drop 5 to 10% in a matter of minutes. And one big purchase could easily cause the entire market to skyrocket 5% instantaneously.
Graham brings up a really good point, but here's what's really interesting. There's this legendary investor by the name of Bill Miller who recently said something really true about Bitcoin, which is the larger it gets, the more stable the price becomes, which is literally the opposite of how the stock market works. Which, by the way, go get your 4 free stocks using my link down below. By depositing $100, you'll get 4 free stocks, of which 2 can be valued up to $1,600 each. But the reason that it's the opposite is when we think about buying stocks, we can compare what that company is earning versus what the stock price is. So we can look at the PE ratio and see that that stock could be potentially way overvalued. But when it comes to Bitcoin, the more people buy it, and the larger the market cap grows, the more stable the price becomes. And that's because the less money an asset has, the easier it is to manipulate its price. A perfect example of this would be in 2009 when Bitcoin first launched and its market cap was tiny, in the thousands of dollars. And that's when it moved 90% a day, and that was a big deal. But as it slowly grew in value, it started to move 80% a day, and then 70%, and those were big deals. And now it's a big deal when Bitcoin moves 20% per day. And in the future, it's going to be a big deal when Bitcoin moves 1 or 2% a day, just like the stock market. Because think about it, anytime the stock market moves 1%, the media is like, new paradigm, stocks are crashing. But volatility is nothing more than the function of the free market trying to decide what the real value of Bitcoin actually is. So yes, it is going to continue to be volatile and go up and down in price until it stabilizes, but that's not a real critique, because volatility is not an inherent trait to Bitcoin's design, because nothing is ever created to be stable. Stability comes with time as you increase volume and liquidity, which over time decrease volatility. Man, I sound really smart. Even though I'm not. But if you look at Bitcoin's volatility index chart, you can see that it does have peaks and valleys, but over time, the volatility is decreasing. Now, Graham's next point is really interesting.
Bitcoin holds value because we give it value, much like the US dollar, which is not backed by anything other than the guarantee that it's legal tender, and that you could redeem a $100 bill for $100 worth of goods. However, the only difference is that the US dollar is backed by the US government, an income-producing nation, and the understanding that everyone universally around the world is going to accept this at face value for what it's worth.
This one is about value, because on one hand we have the dollar that's backed by the most powerful nation in the world, and on the other hand we have Bitcoin that's not backed by anything real because it's a fugazi, it's a wazi, it's a woozy, it's Wolf of Wall Street, fairy dust. But this argument can be boiled down to something called the intrinsic value problem. So Graham is making the point that at least the dollar has some intrinsic value in that it has the backing of the US government, and therefore we trust that we can travel anywhere in the world and redeem it for face value. And that makes perfect sense. So I'll answer this concern in one of two ways: the practical answer and the meta answer. Practically speaking, Bitcoin is actually accepted everywhere they accept credit cards and debit cards, MasterCard and Visa. There's a company called BitPay that's a debit card where you can load all of your cryptos onto, and then when you make a purchase, it just converts it to the dollar. There's also Crypto.com and BlockFi, which by the way is where you can get up to $250 worth of free Bitcoin using my link right here, and they have credit cards. But I don't think that's what Graham really meant. He meant figurative power. And what's more powerful than the backing of the most powerful country in the world? Here's the answer. I'm gonna get a little meta, but this $100 bill, even though the ink does not change, we know that what this redeems today is not necessarily what it redeems tomorrow because of a process called inflation. And I know Graham knows that. But the thing about intrinsic value is that nothing has intrinsic value. And in order for something to have a market value, it must also have intrinsic value. It's kind of a catch-22. And that's because everything at the end of the day is based on trust. We trust that the stock market is real and we can redeem our stocks for real money. We trust for the government to have a fair election process. We trust for the dollar not to collapse. We trust for our jobs to be there for us tomorrow. And I trust that you've smashed the like button, otherwise I won't. Trust me. I would argue Bitcoin shines the most here because it was designed to be trustless. And I don't have to trust any government of the world to give Bitcoin value because it found value on its own merit through the free and open market, which is the ultimate decider. And it spoke loudly because now we know Bitcoin is one of the most highly valuable and sought after assets in the entire world. And if anything has intrinsic value, which I don't think it does, then Bitcoin's would be trust because it's based on mathematics. I don't have to trust for the US government not to print more Bitcoin. I know exactly how many there will be 20 years from now and how hard it will be to create more of them. So even though Bitcoin doesn't have backing of the US government, it does have backing from the most universal language throughout the cosmos, which is trust and mathematics. But that's the meta answer. Here's another concern of Graham's.
The issue I see with Bitcoin is that even though it's being adopted on a large scale, at the end of the day, what people really seem to care about is not so much the technology or the decentralized network or its use as a currency, but instead how much money they could make from this in the future if it continues to go up in price.
To be fair to Graham though, he does go on to acknowledge that his criticism can be made for any investment because most people who put their money into anything have no idea what it is. All they want to do is turn $1 into $100. Except at least with traditional investments like real estate and stocks, there's physical, tangible products or some kind of real cash flow. So one thing I'll say to that though is that there's a big difference between how traditional investments behave, stocks and real estate, versus something called commodities. That's because the CFTC, which is an independent government agency that regulates the derivatives market, has actually classified Bitcoin as a commodity. So by comparing a commodity to real estate and stocks is like comparing apples to oranges, and that's not very fair. Because commodities are things like gold and oil, which get their value very differently than traditional investments. And so people speculate on them in different ways for many different reasons. Part of the ways commodities get their value is through their real world use case. For example, we know that oil basically powers the entire world. We know that gold is used in things like dentistry, jewelry, making smartphones, laptops. They have practical applications that go beyond just trading the asset and guessing what the price is. And the critics of Bitcoin say that Bitcoin does not have this trait because it's purely digital. Therefore, it allows people to, without knowing Bitcoin's real world use case, to speculate on the price that much more. And to all that, I'll say that's 100% true that most people have no idea what it is. Even our own government has no idea what this is, and it doesn't stop people from selling their house and buying more Bitcoin with it. But that doesn't change the fundamental reality of its use case and why it was created, which is to exist as a payment system that allows you to send money from A to B without ever being censored from across the world almost instantaneously, that for the first time in human history, it gives control over power and money and influence back to the people in a way that still allows it to be a sound good money and have all of those principles. And that's powerful. So yes, even though people speculate on it, it doesn't change the fact that it is still an amazing piece of technology. And just like when a stock goes down in price, you don't necessarily immediately sell it because it's worth less today if you really understood why you invested in the first place. Just like with Bitcoin, you don't want to sell it tomorrow if it crashed 50 or 80% if you truly understand why it exists, why it was created, and its real purpose. But regardless of which camp you're in, whether you're on Graham's side or my side, this is something we both agree on, and it's really important.
And there's really not a lot of harm of investing a very small percentage of your overall net worth into Bitcoin just so you're exposed to it. But I certainly would not go all in or invest an amount that you're not comfortable with losing because at the end of the day, this thing is a wild card.
I've always spoke about this before, but please only invest what you're willing to lose. Look, if I was so sure about Bitcoin, I would have most of my net worth in it. But I don't. I only have 10%. And yes, it's grown into a lot of money, but could have just as easily gone the other way around, and it still can. Because who knows what's gonna happen a year or even 10 years from now? Will there be a technological shift? Will something change? Maybe, but in the meantime, we could be investing in what could be considered one of the most important inventions of our entire life. And if there is a chance for our dollar to go to $100 or even $1,000, then I think it's smart to take that risk, which is why I have. But that's just me. In the meantime, please be careful. Love you. Thank you so much for watching this video. I will see you back here on Monday and Friday, sometimes a Wednesday, and I'll leave you with this last critique. Graham's wave at the camera.
And I'm gonna do that cool outro again. Look at this. Keep doing this. All right.
It's not bad, but he needs a little more like this.